will bankrupt America, the 23 trillion property scheme. Section 1. The hidden crisis. America is already deep in an economic crisis that is not being openly admitted. Property values, taxes, and debt have been pushed far beyond what households can afford. This is not a future risk. It is happening now. Section 2. The property overvaluation problem. More than $23 trillion in property value has been inflated through aggressive appraisals. These inflated values are used to justify higher property taxes and massive borrowing. The values do not reflect what homes are actually worth or what families can pay. Section 3. The bond debt trap. School districts have issued trillions in long-term bonds backed by property taxes. These bonds act like a hidden second mortgage on homes. The interest compounds faster than household income grows. The debt cannot be paid off. Section 4. The income reality. Median household income is the real limit of the system. Nearly 40% of households are already at risk of foreclosure or bankruptcy. Taxes and debt are rising while income is not. This gap is the core failure. Section 5. Bank and government exposure. Banks hold trillions in impaired loans tied to property taxes and bonds. Local governments depend on this system to survive. When households fail, banks and municipalities fail with them. Section 6. Why this is bigger than 2008. This crisis mirrors 2008, but on a much larger scale. Instead of mortgages alone, the entire property tax and bond system is exposed. The debt load is larger and the income base is weaker. Section 7. The collapse path. As refinancing fails, liquidity dries up. Defaults rise. Property taxes become unpayable. Foreclosures increase. Banks and local governments face insolvency. The system feeds on itself. Section 8. The core warning. This is a credit crisis driven by math, not opinion. The money does not exist to support the debt. Without structural change, the system moves toward mass defaults and economic contraction.